Oh, hi everyone. Apologies, I've got everything ready except the most important thing, which we have here, and as I know you can see now, which is the disclaimer. As you know, trading can be a very risky business, particularly if you are very heavily leveraged. So please don't ever think of using money that you cannot afford to lose. So with that, we'd better crack on before the London Open actually opens. But before we do, just very quickly, because I know this is a new series, and I know we've got some new people joining us today, along with our some of our quantum students, as well as our Forex program students. And if it is your first time with us, welcome. And what we're going to do is obviously we're going to look at the Forex market, and we're going to look at it particularly on the charts, using a methodology which we call volume price analysis. And this is where we look at obviously the price action, but we also look at the volume, the activity, the participation, if you like, that goes with that price action, to tell us whether, first of all, whether that move is genuine, because we're always looking for anomalies, because as you know, this is a very deceitful market in terms of for us as mere humble independent retail traders. The market is there to design for one thing, and that is to part us from our money. But once you understand how price action works in relationship with volume, trust me, you will never be taken advantage of again. That's just the technical analysis side. Then we also look at what's happening on the fundamental news side, but we also look at related markets, and those are obviously the other three capital markets, because the Forex market sits at the heart of the markets. It's the markets where it reflects the sentiment in the market. Currency pairs can tell us an awful lot of what is happening, outside the Forex universe, as it were, and will, sometimes dictate the flows that are going into those currencies and currency pairs. And to that end, what we've done, that's David, my husband, and myself, is we developed these for ourselves. Is we thought, right, well, this is how this market works. This, VPA is a methodology you can apply to not just Forex but the other markets as well, and across different time frames. Given that this market is one of flows, and those flows represent sentiment, how can we identify those flows quickly? How can we see in an instant, what is the market, what is the market buying? What is the market selling? What is it selling or buying against? Because obviously, this is the only market where you sell one asset against another, as it were, which is why we developed these very particular indicators. One of them is what we call the currency strength indicator. I suppose it's a bit of a misnomer, actually, because you're also looking at weakness, as it were. But let's stick with currency strength. And what that does, it really breaks, as I said, the currencies into their individual components. So we can see in an instant what's been bought, what's been sold. And yesterday was a fantastic day, particularly if you are a trader who likes to trade the British pound. I am, and I know a lot of traders who trade this session are as well. Why? Because it's local to the time zone in which we are, we are participating. So that's where we started. But then we said, well, that's awfully interesting. Well, we actually want to know, kind of match it up with pairs, as it were. This is where the matrix came in, and it gives us an opportunity to rank, if you like, the strength and weakness in what we call the currency, in the matrix for that currency. And by that I mean we take all the pound pairs, or we take all the euro pairs, and we see whether the flow into the euro or the pound is universal. So is everybody buying euro? And if they're not, the market isn't, everyone in the market not buying euro, well, what's it buying it against? Because if you have a universal sentiment in one currency, the strength of any move is going to be particularly good, and you're likely to get a very good trend. And what we also then refined it even further, these values that you see next to these pairs will also give you an indication of how strong that move is. And certainly yesterday in the pound, if you were trading yesterday morning, we were talking over 100 on the hourly chart, which is a big number. Then we've developed the currency array, which is more a strength of trend. It as I said, it picks up where these other two indicators leave off, as it were, and it's again, you see this sweeping action with the pairs, as it were. And the other thing about this indicator is, if you see them all bunched in the middle like this, you know there really isn't a trend. There is movement, but you know it's not going. There's no firm direction in one way or another. And finally, we came up with a currency heat map, which actually looks at the performance of all the 28 currency pairs across multiple time frames. So the cells you can see here, you can sort of track the flows. You can use this indicator both as a short on an intraday basis. You can monitor your any orders that you may have in the market, or you can use it as on a longer term basis, because it weights the ranking of the pairs, as I said, not just on the according to the short term fluctuations that you get in the shorter time frames, but also when you look at the slower time frames, you've got the months and the weeks and the days. And you can see here down below this, whatever it was when this screenshot was taken, this was the Aussie yen. We've got here, and you look at the values, you can see, well, it's clearly been in a a very bearish move, and the higher the numbers are on the slower time frames, the deeper the move, as it were. Well, for this to reverse, on an intraday basis, you may get the opportunity for some snaffle some quick pips to the upside. But boy, oh boy, to shift that from here back to there is going to take an awful lot of effort, and of course a lot of volume. So starting off with a volume price analysis, then we established, really, it took us a little while to establish how the Forex market actually works. And we said, okay, well, let's see if we can make life a little bit easier for ourselves. So I'm just going to set myself up, because I've got some stuff I want to cover today. In particular, I want to have a look at a quick look at the euro. Primarily, I've got to just pull up the information we talked about it before. With the positioning in the futures market, just to see if the euro longs are still at an extreme. I believe they are, and I mentioned a couple of weeks ago the COP, which is called the COP data. It's a great sentiment data, especially when the markets are all positioned on one side, as it were, when the trade in the market is so asymmetric. Everyone is on one side of the seesaw. You can be pretty certain that sometime you're going to have quite a dramatic a reversal. But it's not for intraday. It's just something to bear in mind of. The other one is the pound. Obviously, yesterday was a great day for the British pound. If let me just pull it up here. Here we are. This is the dashboard that I actually took. This was the screenshot that I put on my Facebook page with Forex. And this is what I mean yesterday. Compare with what we have on the CSI today. It's not, I wish it was like yesterday, a huge move in the British pound, and for a couple of reasons. Primarily, Brexit, the talks are back on, and in the media there have been some warm words certainly coming out of the EU. The stance is being softened, and so the market thinks there is the possibility of a deal. So Brexit, a clear driver of what the flows into the British pound, and also this rowing back of negative, the use of negative interest rates. Whether that's true or not, who knows? But it's not a case of truth when you're a trader. It's what the market perceives to be the truth, and the reaction of other traders. That's what we are, that's what we're trading, if you like. So what this indicator does, this massive buying of the pound, and this is what I mean by the values. You can see here the pound yen plus 100. But look down here, this was minus 55. Now, what this tells you is that this was a big move, and cable was a big move against the CAD, because you're almost to triple figures. The euro pound, minus 55, not as strong. The clue is also in the currency strength indicator. Why? Because the euro was rising at the same time as the pound is rising. And what these lines tell you, not only do they tell you, highlight potential trading opportunities, but they also possibly tell you where it's not such a great opportunity, particularly when as I said, the lines are rising in tandem. So that was obviously that was yesterday, but I just wanted to highlight what I meant by these extreme numbers. Now that actually brings me, this is what we're looking at today. And you've got a bunch of them up here, you know, a bunch of them down there, and it's not. David's got the faster time frames. He's got the pairs, so we'll move over to his screen to see, in fact, if they're, you know, what are the trading opportunities this morning. It also brings me to a question. It was actually sent to me from one of our Forex program students. We have a what we call it's a trading room, in the sense that we encourage people who buy our program to join, and then David and I are there sort of in a supportive role. They can ask us questions about the program. The program is primarily designed to be, it is self-directed. By the time you come to the end of the program, you'll pretty much know everything you need to know to trade in this market. And it also includes all the indicators that we have developed, as I said, initially for ourselves, that are now part of the program. But it was a very interesting question, because it actually touches on session crossovers. Now, I really need to bring up some pictures for you. Let's have a look at this one. Yeah, his question was, essentially, if you have a really nice profit in a position, say in one session, and he was talking about the London session in particular. In fact, he was saying, he'd say, oh, I have 50 pips. What should I do when we come maybe to the New York session? You know, should I close out, or should I roll it over, and what have you? Now, it does pretty much depend on the time frame that you are trading. But let's assume you are an intraday trader, and yes, I have got the 60-minute chart here as an example, but it doesn't matter whether it's the 60-minute or the 10-minute or the 30-minute. This is just the principle. First of all, if you've got 50 pips in as a profit in a trade, you are doing fantastically well, absolutely fantastically well. You also then have to be aware of the session crossovers, particularly from London, Europe, moving into New York, where you can get massive shift in sentiment. You've got different items of fundamental news coming out. So what do you do? It then does get back to time frames. So if you're trading on the faster time frames, and just suppose you have multiple contracts on, the options are you take some of your profit, and you maybe think, by looking at the slower time frames, you think, you know what, I actually think that regardless of what happens in the New York session, there may be a correction, a tradable correction, maybe a pullback. I actually think that, I think this is going to resume, if you like, possibly not by the close, but possibly tomorrow. You have to make those decisions by looking at multiple time frames. I also said you can get a continuation of the trend. In fact, we had that last week. I think David was looking at that, which was the pound Aussie. I think it did 500 pips, how many, 200-300 pips in a day, but it was divided by something like 100 and something in London, a complete reversal in New York, and and everyone, great if you're on the if you caught that ride up and down on that roller coaster, good for you. So it can happen that you can have a pair. Pound Aussie is one of my favorites anyway, but it can do that. It can go dramatically higher in one session and then completely reverse, and you can take the trade to the downside as well. So it's not there's not an easy answer to that question. There are various factors that you have to take into account. But just to give you an example of what I mean, this was the pound. This is actually quite a nice chart. It's the 60-minute chart. What it also shows you is the differential in volume. By volume, I mean by activity and participation in the different time zones. So here, obviously, we have what we've coming up to, this is opens on Sunday. Yesterday was the 20th. So this is the open, if you like. So there's hardly anyone around. Well, clearly not, because it's, you know, the trade, there's not a huge number of traders in New York and Australia. And then when you have Tokyo join in and you have a few more. So that is relative, if you like, and it's in context to what is happening at that particular time. Then you have, here we have the Europe session, and then we have the London session, and we have the, you know, the increase in the participation, increase in the activity. What I have to say is it doesn't invalidate what is happening over here. Now you have to remember, this is the hourly chart, so the hourly chart is going to reflect this, you know, it's going to capture these two time zones, if you like. So you're going to see this differential. But if you were to look at this price action here, this volume and price action on a faster chart, then it would look much more you know, in tune with what you would expect. You know, it would be perfectly tradable on the faster, you know, as an intraday trader for the traders in that session. We get this in rush of volume. This was, as I said, this huge buy in the British pound. It was pretty much across all the pairs. And curiously, the shape of the price action on the chart was very, very similar. I think I had cable in the morning. Cable even looked like this. And here we're coming up here. Now, when I talk about the US session for Forex, as we know, the US session, the physical market starts at the equivalent of 2:30 p.m. here in London, but the US session for Forex actually starts around, is it 1 o'clock, David? The Forex traders kind of come to their desks a little bit earlier, as it were, but the physical market starts at, in our time, you know, according to GMT at 2:30. So you kind of start to see a shift, if you like. You also have to remember the traders in London start going to lunch. I know you might think that's a funny thing to say, but, you know, the traders are human. They're creatures of habit. You know, it's 1 o'clock, it's time for lunch. So maybe they close their positions out or they pause. So what happens is, coming up to even 11:30, 12 o'clock, moving into 1 o'clock, things start to, you can see this kind of slowing down, this pause, particularly if you've had a big move high. And what's interesting about this move, as I said, on the this is the hourly chart, the arrow sort of is covering some of the volume bars, but the volume bar I want to highlight just before we came to this the shooting star candle, which is a strong candle of a potential reversal anyway, and it also hit this volume resistance here on the VPOP. Is this candle, is the candle that preceded it. Now, the one before, which is this one, that volume bar was the same as that one. So we can say, okay, well, it took that much, you know, that went up that much with that amount of volume. Then we had this one. It also triggered the volatility indicator, which tells us that that piece of price action was outside of the average true range for this pair in this time frame. Of itself is also another signal that possibly this is coming to, you know, something is going to happen. It's going to pause. It's going to possibly reverse, congest. But it's the volume underneath it. It was exactly the same, if not slightly less than this one. And you think, so that's more. There's a lot of momentum behind there. Now, if you have a lot of momentum with the trigger of the volatility, and you have a bigger candle, you would expect a massive amount of volume, but we didn't. And in fact, then we had the shooting star. Now look at the timestamp. We're kind of moving into, you know, the beginnings of the Forex session in New York, so it's 12. So putting all these things together, you can reasonably assume from that, to get taken with the candle, something is definitely, yeah, something's afoot, as it were. So as I said, this is the hourly chart. So that's how you must start to think about these sessions and the session crossovers. Now, to put it more into context and to give us a better idea on the thing, what I actually did, I went right down. Now, this is the Renko chart for that piece of price action on the 60-minute chart. And what you will see is, what did I say? This is the initial move lower. This is in the area of where we had the shooting star candle. We did actually have the reversal. It was at 1960, and it did start to roll over. Now, what the Renko does, because you really use a Renko with a faster time frame. So what the Renko does, I can't remember, this is set at 3 pips. It is going to pick up the pullbacks, as it were, and the indicators here will change, and that may even have been a potential trade for someone who's a scalper, as it were. The 60-minute chart actually absorbed this, but I just wanted to show you this reversal as it came into the US session. So if we take that as the primary trend lower, this was the secondary trend. The key thing here at this point is you then start looking at the support and resistance levels. And this resistance level here, it actually turned out to be it came off what we call the R4, which is a key level on the Camarilla. So I mean, it's an important level, and potentially is going to reverse. So it did actually pull back to this area, and then the full reversal, the resumption, what we call, of the trend did actually carry on lower. It was re-established as well. Trends, primary, secondary trends, Wyckoff's law is everything that is covered in huge detail in the program. In fact, it's a question I'm asked people who are interested in the program, say, well, I bought all your books, can I just trade using your books and maybe the indicators that you have? And I say, yeah, sure, it's entirely up to you. Why should I bother investing in your program? Well, the program really, it takes it to another level, particularly on the Wyckoff side, looking at trends, looking at, as I said, the primary, secondary, how you can multiple time. I mean, I'll go on and on and on. You can go on the site. David's got the link. He can show you what you have to look at, what the program actually involves. And of course, it involves, you get all the indicators as well. So that's what it looked like on the Renko. If you were following using the indicators, that stayed blue. This is the trend monitor. This is the hourly chart. That noise that we had on the Renko, not noise, the fluctuations, if you like, in the pullbacks back to the in the area of the R4 on the 60-minute. Was that tradable? Yeah, potentially. It depends on your time frame. But the purpose of this was really to show, what's kind of an answer to this question. So I've got this, I've captured all this. I'm coming up to New York. What do I do? As I said, it really depends on the time frame that you're on. What profits you've got. Have you got multiple contracts? Maybe you can take some off. Maybe you want to keep one on, as it was, just to see what happens. And just to bring that up to date, just to see what the hourly chart looks like now, I'm just going to bring it up here. This is the pound Aussie. I'll just bring up the pound Swiss, because that kind of that's the one. I want one with the Camarilla on it. Let's just say, let's have a look. Now, with the Camarilla as well, the other thing to bear in mind with it is the values that are shown on the 60-minute chart. Let's have a look. Oh, I have to see, I've got enough days. Hold on. No, I haven't got enough days. I've almost confused myself there. Let's have a look. With NinjaTrader, what the platform does, for some reason on the 60-minute chart, it will only put in 5 days, and that's not enough to give you the values that you actually need. I think it's a way of saving memory or something, David? Yeah, it's not to overload the system. There we are. Right, that's what I want. Just reload the indicators, historical data. Let's just switch time frames. Oh, there we are. Right. So what happened? There we are. So this was what we were looking at yesterday, and this was the reversal low. It did actually carry on lower. Let me just bring up the time. Oh, okay. Hold on. I always forget how to do this. There we are, stretch it out, and that actually brings this timestamp up a little bit. Right, so this, if you remember, this was the move higher. It was a reversal from, you have to be a bit flexible with support and resistance zones. As I said, this was the outer region of the volume point of control. In fact, not now, possibly in this afternoon session. I really want to talk a little bit more about the volume point of control and these levels that are created by the indicator, but it is because I've been doing some some looking at it a little bit more closely, and it is really an extraordinary indicator to help us with reversals, particularly in multiple time frames. Anyway, by the by, so we know this is a strong level based on volume. We have this key level R4. Where are we here? This was 6 o'clock our time, 1800. It did actually go lower, went down to the R1, attempted to rise. It's actually moving sideways. It still looks possibly so. This is what this is also what we have to look at is reversals. This is unusual. This kind of it's not a V shape, it's a V upside down. It's quite unusual. What tends to happen, you tend to have a congestion period, and then you have the rollover. And what's supporting this at the moment is actually because it's hitting these key levels. So if we look at what's happening on the CSI, what do we see? Well, we've got as on the hour, we've got the Swiss rising. The pound isn't really doing very much. It's kind of can't decide whether it wants to fall. I mean, clearly, pardon? Yeah, they're buying yen at the moment. So anyway, so that's where we are at the moment. So it's probably not one to watch. Would you have kept a position open at this time? It's entirely up to you, but you would have to accept that you would have a quite a big pullback while you waited for this primary trend to move higher, to continue, as it were, and then you have all your levels that it would have to get through, as it were. Right, let me pass over to David, because I think there's something exciting going on over your side. Is that right, David?